Welcome back, guys and gals. Welcome back, welcome back. It's about that time of day again, 7:30 a.m. Eastern Time. My name is Joseph. I'm from School of Trade. I'm here with Marty Errico. He's with Traders Audio, and welcome back to our crude oil morning prep. This morning, we have a very unique morning analysis. This morning, we're going from the screen here in Los Angeles all the way across the continent to the floor on the NYMEX exchange. I'm going to start with a technical approach, a top-down approach, meaning I'm going to start with a weekly chart today, right? We're going to set the stage with some dailies and some weekly charts, and we're going to drill it all the way down to a 5-minute chart. And using all of that information, I'm going to analyze top-down, moving all the way to what happened overnight. And my job today is to anticipate direction at the open, looking for high percentage trading opportunities. That's all we can do. All we can do is be prepared. As we say in our live trade room every day, the market's going to give us a quiz every day. And we're lucky because unlike when we were kids in school, remember how the teacher would say there's going to be 10 questions on the quiz tomorrow. Here are the 50 questions, right, that might be on it. And you have to study all 50 of them. I know, I hated that too. Well, as a day trader, we have it easy. Crude oil futures tells us, Joe, there's a quiz today. The quiz is going to be of one of 3 questions. What if price rises? What if price falls? And what if price, you got it, trades sideways? So there's going to be a quiz this morning, and I want to prepare for that quiz so I'll be ready for those high percentage opportunities. We can't guarantee anything in this world, let alone day trading. But what I can do is put the odds on my side by looking for those high percentage opportunities starting at 8 a.m. All right. Enough from me. We're going to grab Marty here in just a few seconds, but before that, let's look at some charts. Now, the first thing I want to do is I want to look at a weekly chart. I know. Remember, kids, these weekly charts, don't be fooled by a weekly chart. Weekly charts only set the stage, right? We're not going to use a weekly chart to do anything more than tell us what's been going on this week. Now, usually I'll look at a weekly chart Monday, Wednesday, Friday, right? Things like that. I just want to see where we are. What do we see here? This is a huge clue. First of all, we've been watching this wedge for quite some time, right? If you haven't seen this wedge on this broadcast, we got to get some new glasses because the wedge has been there for weeks. We've known about this wedge for quite a while. The key to this chart, though, is look at the condition of today's weekly candle. What do you see? Well, this is what they call that big candlestick wick, small, teeny tiny body, and we can see just a little hint of bears in it, right? Okay, so we always try to think there are people behind these candlesticks, right? This isn't a computer that makes these. Well, it is a computer, but the people place these trades. All of us come to the market every morning without the same reasons, without the same goals, without the same objectives, and we all happen to make this work together, like a symphony without a conductor. And of course, we can see now this weekly candlestick tells us that we tried to go higher earlier in the week. We have failed now, and of course, this leaves the door wide open for falling prices. Now, what I want you to see here is I want you to see really quickly here as we go into this Memorial Day weekend, I want you to see where the open of last week's candle was. Do you see it right there? The open of last week's candle. If you take your mouse and hover over it, you'll see it's about 95.70, right? 95.71. So the open of last week, yep, 95.69. 95.69 as we go into Memorial Day weekend. If we get below that 95.69, that's where we opened up last week. If we end up below that, you know what that means. Look out below. This price is going to tumble all the way back down, most likely to test that 91.96. If it was a market any other than crude oil, I would say it would take a little bit of pressure to push that down, but we know crude oil tends to have a mind of its own, doesn't it? Moving over to a daily chart, we get a little bit more information. Now, I'm not going to spend too much time on this, but really important here in the daily chart is we can see that same price wedge, we can see that same failure at the highs, but now here's another big clue. I want you to look at Monday's candle. Monday's candle was the big green candle that created the higher high, okay, up there at 97.34. Look at the low of that candle. right? We are right there right now. So two important clues on the daily chart. One, check out the low of Monday's candle, and that, of course, would be 95.46. Okay, write that number down because 95.46 now becomes the level at which when we get a daily candle closing, the keyword is closing at the end of the session, if it's below 95.46, we can pretty much bank on the fact these buyers have failed and we are going to move lower. Moving forward, you'll notice the second clue. The second clue has to do with this trigger zone. I'm going to go A up to B, A up to B, and that's going to give me my 94.85. That 94.85, that's going to be a very important support level here on this daily chart. 94.85 is a huge number today. If we happen to get down to 94.85, we must be looking for buying opportunities. The daily chart tells us we're not quite out of the woods yet as far as the sellers being in complete control. The weekly chart told us we might see those sellers grab control here as we go into Memorial Day weekend. This daily chart, though, tells me I need to get us below that 95.46 before we can really commit to the sellers being in charge. Right now, all we know is that price has moved lower, but we cannot confirm that we have lower prices overall. Let's drill down. Now we're going to start to look at the levels we're going to use today. Now, the 4-hour chart this morning really is the first clue we get that we've got some two-sided trading. Two-sided trading, huh? We haven't heard that. We haven't heard that at all recently. Obviously, I'm kidding because we've talked about two-sided trading here for the last 2 weeks. It went from volatility, right? It went from crazy volatility for 2 weeks. We got through non-farm payrolls. We got through FOMC. We had a lack of news last week, and of course, last week was OPEX. This week, of course, no news on Monday and Tuesday. We got Bernanke this morning, Memorial Day weekend. Smells like two-sided market personality to me, and I can see exactly why. The lack of news, the holiday weekend, summertime, I can smell that barbecue grill starting to get fired up. Guys, if you're not prepared for sideways trading ranges over the summer, you're going to get smoked. We love the summertime doldrums in our trade room because it's easy trading two-sided trading. You just got to identify it. So the first things first, we can see the price wedge. The price wedge isn't surprising anybody. But the big clue on this 4-hour chart, though, we didn't get into that 95.23. How did we go as far down as 95, what's that, 95.30? Right, 95.35? Did we not test 95.23? That tells me right away here something's up. The sellers do not have enough pressure to push it down. There's too much demand in the market at this level. Whatever the reason may be, this is the first clue for two-sided trading. Now, to be honest, this tells me I will be waiting patiently to buy that 95.23. That 95.23 becomes one of the biggest buying opportunities we're going to get. And if you recall, we talked about that daily chart. What was that daily chart level again? 94.56, right? Trend line support. As you can see, we're going to be looking for another test of 94, that daily chart low, and then right back up again too. So two-sided trading tells me from a mile away, buy at support, sell at resistance. But remember, professional traders do not predict. We're not trying to predict. We're waiting for price to enter into a buy zone, wait for it to consolidate, then wait for it to start rising higher, and then we're using all of our specific entry triggers to get into the long trade. Guys, be aware we will get some resistance at 96.58. If you're buying here on crude this morning, 96.58 is a short-term target. 96.89, a nice daily target for the range today. Let's get serious now. Now let's go down to the faster time frames. We've got some great price levels to use here. Now I want to look at the 60-minute. We're going to come back to the 5-minute in just a few seconds. Check out the 60-minute chart. You're going to see a lot more of these details. There's that 96.56 again. The 60-minute chart confirms much of the same from the 4-hour. Usually these 60-minute charts are going to give us a lot of bigger clues, but this time around, though, not so much. And I've got to toot our own horn here for about 2 seconds. This just shows you how effective our advanced price structures really are. We talked about this all week. We had the bearish price channel. And this bearish price channel we talked about yesterday morning before it collapsed. We had made it all the way up into that channel reversal zone. And look what we got out of that, right? A fantastic selling opportunity. As we said yesterday, selling short, buying the bounce. What a fantastic day we had yesterday, all using this morning prep. So the reversal zone is held. And again, now you can see we didn't quite get down to that 95.23. We haven't buried into that buy zone at 95.23. So we are looking either incredibly bullish or simply two-sided. Now again, these levels confirm for me. I can also go in now and draw in a new buy zone here. We will have a new buy zone now starting at 95.64, 95.64. 95.64 becomes your new line in the sand. That's where demand now will enter the market, and we will use that now. If I'm going to sell short later on this morning, that will be another target, 95.64. And of course, that should sound familiar because we just saw that right on the 4-hour. Let's keep going. Moving down now to a 5-minute chart. So 60-minute chart tells me two-sided trading. 60-minute chart confirms the validity of those advanced price structures. Now let's put our money where our mouth is. Now it's time to plan our trades this morning. The rest of this stuff has just been speculation. Now we move down to a 5-minute chart, and now let's see if what we usually use, if that's going to help us to make money again today. First of all, a huge clue for two-sided trading. The first thing I see right away is the size of the trading range marked right in the middle. This is the London trading session. We have a specific calculation that we use that tells us if this price is likely to continue to break out or if this price is likely to reverse. Now, the size of this range tells me that we should have seen prices down around 95, right? That's where price should have gone this morning. But you know, as a day trader, we always talk about the importance of thinking, what's different today? Whatever I'm expecting to have happen, if it doesn't happen, that's a huge opportunity, whether it be for a buy or a sell or for a sit on hands. So when we expect to see prices go through this and head down 95, when it didn't and reversed, that instantly tells me this is two-sided. Guys, how many times do we see price get into the reversal zone and then finally go, right? That confirms what we know usually always happens. But the reality is we didn't get that. What we got was a double top at the highs. And just like we talk about in our newsletters every evening, these double tops are powerful buying opportunities, right? Now, many of you will sell a double top, but in my humble opinion, it's not the high percentage trade. Remember, double tops tell me the buyers tried once and failed. Oh, really? I'll show you. Tried twice, fail again. I'll find some help. I'll find a bazooka. I'll find a sledgehammer, and we will come and we'll blow right through this double top the third time. So we know that the double top, all you members out there on the call right now, all those double tops out there, we're always looking for that reversal. And it's a great clue here as we go into that 7 a.m. till 8 a.m. range. Okay, all this speculation, Joe, how do I make money with this? And then we're going to turn it over to Marty. I'm seeing two-sided trading, so I'm going to do exactly what I've always done. I'm going to look for a reversal in the reversal zone, sell it short. I will look for a reversal in the reversal zone, buy it long. Now, this, of course, trigger zone was resistance on the way up. Now it's going to be support on the way back down. Let me grab it for you here real quickly here. Okay, so now we're going to have support on the way back down, and that's going to be 95.71 down to 95.62. Okay, so we've got our short-term targets now. So what I'm going to look for here is, again, never predicting, always reacting. I'm going to wait now for price to reverse out of the reversal zone, I'll look to use my entry triggers to sell a retracement, and I will get into this trade short with a target of 95.71. And if I've got enough bullets in the gun, the final target will be all the way back down to the session lows, right, to the range lows. That's the short. Remember, nothing is written in stone. So if we happen to go through this to 96.14, okay, we get a candle close above 96.14. I'm buying pullbacks up to, remember how we said, guys? Remember how we said that this should go lower to 95? Well, just like it should go lower 95, it should go higher here now to 96.35. And we have what we call a confluence of levels. We have a London reversal zone and a buyer's reversal zone, right? So buyers, your target's up at 96.35, excuse me. So 96.35, going to be my nice buying target. Most importantly this morning, I'm going to be paying close attention to what happens after it. If we fail and come back down, oh baby, I'm looking to get short. But if we keep on cruising, if we keep on cooking to the upside, we will continue to see prices rise. We have the weekly highs above us, right? So I will gladly keep buying pullbacks as we keep going. Again, I'm not going to predict. I'm going to wait to buy that pullback. We got the weekly highs up top here. So there are some definite levels that we have to work with well overhead. I'm going to put this chart up on the blog, of course, so you guys will have all these levels for your disposal later on today. Okay, so again, wait for that candlestick to close above the 96.14. I'm buying pullbacks up to 35, buying pullbacks above 36 up to 96.60. And remember, at any moment we see this thing reverse, I will be looking for that fake out breakout. You know crude oil loves the fake out breakout. You know these two-sided markets are going to be easy for those price reversals. It looks like the buyers have something under their skin right now, though, so I would expect to see 96.35 being tested here quite in just a short period of time. And remember, the same thing will happen to the downside. If we happen to fail, I'm going to sell the highs, take the profit of the lows. I will then look to buy these lows. If we fail, that would be 95.17. I will be looking to sell short down to that 94.95. Keep in mind, we do have levels at 95. We do have levels at 94.70. Keep an eye, members out there, if you're on this call right now, members, we've got previous low of day at 95.02, and then look at this. We have a previous high of day from way back 1 week ago. That's a previous high of day. So we have a ton of levels here below us to use as targets for shorts or as price reversal spots for your buys. Once again, my name is Joseph. Thank you for coming in and watching this technical approach. Now I'd like to turn it over, go across the continent. I'm here in Los Angeles. Let's take it down to Marty Errico on the floor of the NYMEX. Marty, I want to thank you for being here today. What are you seeing out there on the floor? And great to have you back here today, by the way.
Thank you very much, JJ. Yes, I'm all rested and ready to go. All right, so I definitely agree with JJ here on just the point that we have to cover both sides of the market, play both sides of the market. It's very important to do that. The reason being is because we have a lot of news coming out today. We got Bernanke 2 times today. We got petroleum status report, our inventory numbers. So we're going to be seeing a lot of activity, volatility in the market. Even though we have low vol, we're sitting on just 23% implied volatility. In the OVX, we're sitting just at about 23 bucks even. So you see, we line up on cash and implied vol, and we're just kind of sitting tight. You see, the last couple days we had just very sideways type trading range. Look at Monday, Tuesday, Wednesday. Very, very sideways type trade. We've been waiting for basically anticipation of Ben Bernanke and this number. So last night we had the API numbers hit the board. A little bit of a bearish tone to them, if you ask me. Right here, what we saw on the API inventory numbers from last night, crude comes out with a 532,000 barrel build. RBOB comes out with a 3.3 million barrel build. Distillates come out with a 459,000 barrel build. And Cushing, Oklahoma comes out with a 471,000 barrel build. So builds across the board in all of our products. That's crude, RBOB, and heating oil. And even the Cushing numbers were having a build as well. So when we see builds across the board, that gives us an indication for today's numbers that hit the board at 10:30 could be a little bearish tone them, especially if they come out like with this type of build. 500,000. We see all this type of bearish tone. So forecast for today's number for crude, we're looking for a negative 400,000. So we're looking for a draw of 400,000. RBOB, we're looking for a draw of 2.2 million, and distillates, we're looking for a build of 1.1 million. Cushing, Oklahoma, we're looking for just about 500,000 barrels on draw side. So if we get builds, that will be very, very bearish because of the fact we're looking for draws already. So that's one thing. Again, Fed today as well. We have Mr. Bernanke speaking, testifying on Capitol Hill in front of one of the Senate committees at 10 o'clock. And then at 2 o'clock, we have the FOMC minutes. So a lot of anticipation until we see those minutes. And we hear from Mr. Bernanke, he could move this market. So we've been talking about sideways to a little bit of a bearish tone the last couple of days. We've been seeing the same exact divergence in the products as well. We see RBOB, we see heating oil just drifting sideways, trading a little bit lower, waiting for the next news story to move crude. Crude is always waiting for the next news or geopolitical news to move the market, always. So we're waiting on it now. You see the sideways trade. I agree with JJ. If we get below 94, the bulls are done. The bulls are done if we get below 94 bucks. Let's just put it that way. Very easy to see that as well in the charts. Anything above 98, the bulls will still be back in charge. Other than that, we're going to be chopping it up just a bit here. Now, let's look at the products real quickly. Let's rock and roll through the approach that we like to look at. So crude, right? Still in negative territory for the overnight session due to these builds in inventory. Crude just trading around 96 even right now, 96.10. Open interest currently stands 345,596. That's a little bearish, guys. Getting higher there. 345,596. Implied volatility sits at about 22%. Just ticked down lower by 1%. So implied volatility kind of just really hasn't moved too much. Not too much volatility in this market. Again, vol has been on the offer. Gamma has been on the bid, and we've been getting these break-even ranges the whole week. So if you're a gamma scalper, you're killing it this week. And I must say, I know a bunch of them on the trading floor. So that's basically been the sentiment on the trading floor. That's what we've been seeing. RBOB gasoline, same type of story here. Chopping it up in the roll. We are now July. I got RBOB trading at 282.11 right now. We're down about a penny and a half. Implied volatility 25%. Open interest 98,355. A little bit of a bearish tone to the RBOB as well. Again, that implied volatility up to 25%. So he could be the leader today. RBOB will be leading, and then we'll see heating oil and crude lagging. All right, let's talk heating oil now. 290.32 is trading on the heating oil. We're down about a penny and a half as well on the day. Implied volatility ticks up to 20%, which is above average on the heating oil and volatility. Open interest currently stands 79,773, a little shy there this morning compared to where we were last week. Brent crude as well has been coming off, holding levels now, holding the level of 103.5. So that's kind of something to really keep our eyes on here as we look at our multiple market divergence and we try to get a good idea of what's happening. When that Brent holds above 103.5, it's promising until we see our inventory numbers. We can probably see, right, if we're expecting a build in inventories, right, they're going to probably try to run price up a little bit so they can get a good sale, right? So they run it up and then they can fade the news. So they want to run it up, get a good fill on the shorts, and we're going to be keeping an eye on how these big locals and how these big traders are going to be positioning themselves before the news. So we will keep our eyes on that. Looking really quickly here at your spreads now, let's take a look at the Brent WTI spread. Let's take a look at all of our indications here this morning. So the Brent WTI spread rather tight this morning, and that gives us the in line with expectation type of move here. This gives us the in line with expectation move because I say we can catch a little bit of a bid and then they can fade that news if we come out with a build. I don't know what the inventory number is going to be. I'm telling you guys what the APIs were, so it's likely that's what the inventory numbers will look like. So, all right, 767 on the spread again, so that's rather tight this morning. Bullish for crude, but for the most part here, the spread has been in a narrow range trade for the most part of the week, so we wouldn't really bet the whole house on that. Calendar spreads have been also just rather mid-range at the moment. Again, we're only in by 15 cents on this Brent WTI spread, so that's really not too much of a bullish indication. I would say it's more of a sideways indication. All right, calendar spreads here were 18 cents in July to Augie. July to SEP trades just about 32 cents, and the July to OC is trading just about 21 cents. So you can see those spreads are giving us a mid-range indicated type of trade. We're very, very thin in the spreads as well as we just rolled, obviously, so July taking the fronts there. Let's look at our dollar index here. Dollar is unchanged basically on the day. We haven't seen much activity in the dollar index today, to speak of yet at least. So the dollar's been just chopping it up sideways below the 84 handle. We're 83.95 half, and we've been continuing to watch this dollar just trade sideways. Recent, I'm talking just in the last couple hours, very sideways activity. Other than that, today we've been seeing, well, really yesterday we've been seeing just downside activity yesterday, but now today we're kind of just trading sideways. Moment. Once again, your dollar is, you find it on the board here, 83.95 half. So really not much to speak of the dollar. Euro, same thing. Euro's kind of just this well here, 129.33, just up about 30 points on the day. So we want to keep an eye on our currency differential, of course, and our risk-on, risk-off sentiment. It's tough to give a risk-on or risk-off sentiment because right now the dollar is just flat. Again, these other markets are going to be in anticipation of this Fed as well, so that's going to be another thing that we want to keep our eyes on, especially the fact that we're waiting for Fed. So we look at our risk-on, risk-off sentiment right now. I don't have much to say about the risk-on, risk-off sentiment. The supply-demand differential looking sideways until our number. Continuing on here. We're going to take a look at some levels here now. Let's take a look at a couple levels here. Again, we talked about volatility. We talked about all the gamma stuff. Okay. All right, so levels, real quickly to wrap this one up today. We're going to be watching crude again. Pit session high from yesterday, 96.97. The low, 95.72. We closed and settled the day at 96.10, which we are trading at basically right now. We had a net change yesterday of just 49 cents to the downside. Range yesterday of about $1.25. So you can see low range, sideways type activity. Daily pivot today, 96.26, which is trading below right now. Implied volatility sits at 22% with the OVX trading 23.11. All right, got some support and resistance for you guys. Resistance above 96.80, 97.5, and 98.76. Support down below, I got 95.55, 95 even, and 93.76. So right now we haven't breached any major levels of support or resistance. We've been sideways for the most part here today, and I think we're going to continue to watch this sentiment sideways for the most part until we get our numbers out and Bernanke speaks, and then we're going to see a little breakout. All right, interest here in the pit. What we saw, large trades in the pit. We see the July 95 call trade over about 3,000 times yesterday in the pit. Again, the July 95 call trades over 3,000 times in the pit. On the put side, the 93 to 94 put trades over 10,000 times. This is what I mean. If we get below that $94 level, we're done. The bulls are done. So you can see 10,000 times the 93, 94 put spread, the 93.94 put itself individually, they trade over 10,000 times. So a lot of capturing risk to the downside. Again, we got these large guys, large locals, massaging some risk around the market, shoring up their downside, just so you can obviously see they have the downside all shored up. All right, let's talk about natural gas real quickly before we let you guys go today. Natural gas has been on the run. Again, I don't know if you guys heard me the other day, but I was saying that we were interested in the $421, and look where we went to yesterday, $421. Now we're kind of just going to be fading off the high. Again, the $420 level was that 50% retrace from the big sell-off from 2 weeks ago after inventory numbers, or 3 weeks ago now. After inventory numbers, it was just a 50% halfway back. With this, natural gas is now just kind of going to fade off there. That's target. The 420 was the target. Now we're going to be fading off that high. This had to do with a little bit of some weather patterns changing. Again, demand is picking up because of the weather. Warmer than expected weather. They're using natural gas to cool. Analysts also projecting a shorter shoulder season than expected. Another reason why it went higher. And also, they were able to get the liquefied natural gas deal where they're able to distribute it all throughout the country and now send it overseas because natural gas is very cheap in the United States and it's very expensive in these other countries. So they got the deal, made natural gas trade higher, and now we're just watching this fade off that ultimate target of 420. So 422 is going to be some decent resistance above, and then we're going to be watching a fade. Tomorrow's inventory, so really just watch sideways activity, trade the range. Again, natural gas really respects its range. If it breaks above 422, buy the highs, guys. I don't know what to tell you. Buy the highs and just keep on going. But other than that, I think we trade between 415, 421. We trade very simply within our range, and like I said, natural gas respects its range. I say we fade the 420s and wait for news tomorrow. And Yeah, buy the highs if we break above that 422. You might as well, because there's some really good variables in the market where we should be buying the highs and we should be going higher. But that's if we break above 422. If we don't do it, then we're trading in the range. Very simple approach. Again, we're going to wait for inventories tomorrow. Definitely sell these highs, trade the range, be smart about it, and that's all I can give you guys for natural gas, except some levels now. High yesterday, 421 even. Low, 415 even. Close and settle at 419.30. We have a net change of 4 cents higher yesterday, a range of about 6 cents. Daily pivot today, 418.40, which we're just trading below right now. We just started to trade below. So again, watch that daily pivot. If we open below it, we'll get down to the bottom of a range at 415. Implied volatility sits at 30%. The vol index is 2968. Levels of resistance above, I got 421.80, 424.40, and 430.40. Some support down below, I got 415.80, 412.40, and 406.40. Largest strike levels that were trading in the pit, the 420 call, the 450 call, extremely bid, but not too many times, over 1,000 times only. The 390 put was traded over 3,000 times yesterday in the pit, and that was open outcry figures. Again, we've been seeing some decent sideways trading volume the last couple days for a very sideways market. It's been decent in the pit, and today is going to be a pretty big day, I think. Even though volatility is low, watch for the vol to maybe catch a little bit of a bid. Watch that gamma to start get offered, and then we're not going to be in this stupid range anymore. So that's all I got for you guys. I'll see you guys in just about an hour, a little less than an hour, inside of an hour at 9 o'clock, or sorry, 8:50. I'll take you guys through the opening bell, and we're going to rock and roll here again. Alrighty, guys, I'm going to give it back over to JJ in Los Angeles as we are here big time for you guys once again this morning.
Awesome job, Marty. Thank you so much. Great to have you back here today. We don't hear you say buy the highs too often. My ears perked up there. It sounds like sounds like you'd be a trend follower in the big scheme of things. Great to have you here, though, Marty. Thanks for your commentary this morning. As you can see, we got a lot of stuff talking about this morning. I think if I can kind of wrap up what was said this morning, the technical approach this morning said two-sided trading. Marty came in this morning and said, you know what, guys, we've got Bernanke here speaking this morning. You know traders are going to be sniffing through, right, sifting through the words that he doesn't say, right? You know everyone's going to be lingering on whatever Bernanke doesn't say today. So you can expect a lot of traders to be looking at that. And, of course, we can't forget about inventories. Inventories are a huge clue for two-sided trading. We haven't had any news this week. We came out of options expiring last week. I'll tell you, if there's a day of the week where you could see a couple surprises, this morning is going to be it. Traders going to be gassing up the boat, lighting the barbecue grill up for the weekend. We get the summertime weekend kickoff this weekend, so you know today is going to be possibly late morning heroics here on crude oil and natural gas. Listen into Bernanke. Be aware of 1030 inventories today. Be aware of the holiday weekend creeping in tomorrow. Remember, Friday's a half day. And guys, you can see here, we've got some divergence firing off. Those little arrows at the top of this chart here are divergence. Divergence fires off at the top of our price reversal zone, and this is just another clue. Look at the buyers having difficulty getting that price to close, right? Incredible. Now we should see these buyers fail. This is your chance now, and this is something that we see all the time. Now, in the first few months of your trading career, you're going to let your emotions jump into that trade too early. But as you get to know crude oil and the market personality, we've learned over the years of watching this over and over again that patience will pay very, very well. We like to wait till that moment when we know those buyers have failed and those sellers are going to grab it and yank it right down. We're going to wait for that moment when we say, we gotcha. And that's when we take, right, just give your playing a game of poker. Once you find yourself with that strong hand, take down the house. So this morning, be patient for that perfect opportunity today. If you're a member of mine out there, you know exactly what you're looking for this morning. And I want to thank you guys for coming in and hanging out with us this morning. As always, 7:30 a.m. Eastern Time, we go from the screen to the floor. We're expecting two-sided trading here this morning. My name is Joseph James. I'm JJ at School of Trade. That was Marty at Traders Audio. And as always, don't forget, guys, you got to learn it so you can earn it. I'll be broadcasting live from Las Vegas, Nevada tomorrow and Friday as we go into the long weekend. So don't forget, guys, to get your plans ready for the holiday weekend, and we'll see you guys here back tomorrow morning, 7:30 a.m., like clockwork. Thank you, Marty, for being here. Thank you all for listening in, and we'll catch you guys tomorrow. Adios, amigos. Bye-bye for now.